Hey guys, so it's Igor here with Pathway Home Loans, and today I'll be talking to you about the major pitfalls that can jeopardize your whole entire mortgage transaction or your pre-approval. So first and foremost, just make sure that if you aren't looking to buy a home or if you're looking to refinance, that you talk to a mortgage loan officer first, and then you provide the loan officer with full transparency, put everything out there on the table, make sure that you have a concrete plan in place for your whole entire mortgage process, and that you have all your questions answered. So with that said, I'll just go over a handful of different items that you want to avoid before and also during your loan process. The first one being major life changes. So if you're looking to get qualified for a mortgage, or if you're already in the process of getting a mortgage, just make sure to avoid major things that may impact your ability to be able to obtain a mortgage. For example, if you are working at a W-2 job and you have a regular employer, switching from that and opening up your own business and just quitting your job. Or quitting your job, period, or getting divorced, or getting married. All those things may have an impact on your qualification, or may have some kind of an impact on your loan process. So it's really important to disclose that and go over it first. Next, opening new credit or seeking new credit. So that means going out there and applying for credit cards, applying for car financing, applying for a consolidation loan, doing any kind of debt consolidation. All that may have an impact on not just your credit history, but also on your ability to make the payments afterwards. Next, major purchases. So, I know we're really excited, especially if you're in the middle of a loan process, to go out and start buying furniture, start furnishing your property. Start going out there and ordering building materials, especially when those building materials may have a significant weight. But we definitely want to avoid that. Number one, it potentially can have an impact on your cash to close. It can have an impact on your monthly payments and your ability to qualify, because you're qualified based on your ratio of your expenses to your debt. So if you increase your expenses, that may hurt your ability to get a mortgage. And then on top of it, when you're seeking new credit, when you have credit inquiries, it does have the potential to also lower your credit score. So it's important that we avoid all of it. Next, late payments. So you have existing obligations, credit cards, car loans, and everything else. So it's really important not to miss any of it during the process. Obviously, it'll have an impact on your credit score, but especially if you go past a certain threshold, it may have an impact on your pricing or potentially disqualify you from being able to get a mortgage at all. And then that aside, also having major changes in your bank accounts. So that means opening accounts, closing accounts, moving large sums of money around, making large deposits, especially ones that are not sourceable. Let's say, hey, look, I'm going to buy a house. I have this big pile of cash under my pillow. Let me go put it in the bank. We definitely want to avoid all of it, especially when it comes to bank accounts. Due to money laundering laws, we want to make sure that all the money that's being used to purchase the property, we can source, we can show that it's been yours, or we can verify the source that it came from. And some sources are allowable, some sources are not. So hopefully with that, you guys can have some of these things in the back of your mind. You can make sure that we can avoid these pitfalls. We can make sure that we don't have surprises and problems during your loan process. And that aside, it's really important is if you are planning and doing any one of these things, make sure you communicate with your loan officer. Make sure that you have a good game plan together for how to do it so that it doesn't jeopardize your home purchasing ability or your ability to refinance. Thanks, guys.